Now, we always see that there's house prices are going up every single year recently, and also the rents are going up. We've got the cost of living going up, inflation's going up, the cost of everything is going up, including taxes. So we don't really have an awful lot of money left to spend, but unfortunately, when you actually have a look at these numbers that I'm going to share with you today, you may find things getting even worse. Now, what I've done here is I downloaded a whole bunch of property data. So this is all quarterly data downloaded from Nationwide Building Society here in the UK. If you're watching this from the US, it's all pretty much a similar story, right? The UK, US, very similar economies, other than the US make a lot more money than we do over here. This data is from 1968, so we got quite a good few years of data here. This data reveals some very shocking findings. I think it's going to blow your mind completely. This goes all the way back from 1968. Back in those days, landlords could enjoy a massive 24% yield on the properties that they buy. So that's to do with how much rent they get each month. In this case, it would have been about £80 per month in rent, and the house price was generally around £4,000 to buy the average house in the UK. This is the price to rent ratio, and back then the price of the property divided by the price would give you a ratio of 4.4, which was pretty good. I mean, landlords today would be absolutely super happy with those sort of returns. 24% gross yield and 4.4 as a price to rent ratio would be amazing. Unfortunately, if we scroll down to today, what we're going to find is it is the worst ever for landlords and fantastic for renters right now. Renters really don't know how good they've got it. So the average house price now in the UK is £260,000. So over £250,000 to just buy an average house. So more expensive than ever before to buy a house. But the rental yield is actually around 10%. So goodbye 25% rental yield, you're down to 10%. And the average rent is a staggering £2.2 thousand per month, which is quite a stake out of whatever cash that you get. I mean, that alone, that's going to be putting you on an income of £24,000 per year just to pay the rent, before taxes and all the other costs of living. It means that you're going to have to be earning at least sort of 30 to 35,000 just to live a kind of existence here in the UK. So if you're on less than 35,000, you're probably really going to be struggling right now. This chart here shows the absolute glorious situation right now for people that are renting. You can see that this is the price to rent ratio. So it was all the way down here. So landlords were making lots of money down there. Unfortunately, since this point here, which was 97, so around the sort of mid 90s, prices began to rise. But unlike before, where they'd go to a peak and then fall back down, they just never did. All the way up here, this must be 2008. Yeah, that's 2008. And then it sort of came down for a while before rising even higher. And the price to rent ratio looks absolutely awful right now, which must mean that yields are particularly low. So here you can see the gross rental yield for landlords, which has been going from around 25% max there, down up until about that would be 98, 97, and then all the way down to 2008, and then it sort of leveled off and just got lower and lower and lower. And now, as we know, the rental yield, the gross rental yield, is 10%. Now, I know a lot of you that are maybe paying rent are not that interested in how hard up your landlord is right now. But this is just to give you some understanding from the other point of view as a landlord, just how bad the situation is right now in the UK. So what does this mean right now for the UK and probably America and most other countries around the world? Does this mean that the rents are too low and the rents need to rise even more? Can people even afford to pay higher rents? Or does it just mean that the house prices are too high and the house prices need to come back down? Well, how about we just have a look at the gold price and see how that compares to house prices over the last few years. So if we go back here to the data, and we can see again right from 1952 with the data. So here you can see the gold price was all about the same kind of price for quite some time. And this is because during the Second World War, or before that, Britain used to control the sort of international monetary trend, and we had something called the gold standard. So it was sort of pegged to a particular price and it didn't move. Now, after the war, America took over as the international currency, and unfortunately, they weren't quite as good at it as the British. They were, maybe a bit too greedy. They printed off way too much money. And on this chart, you can see right here. So this is the 1971 coming up here somewhere. And this is where their bluff got called, and they had to admit they were printing too much money, and they took the dollar off the gold standard, or at least off the pegged to gold, and the price of gold shot up incredibly. Now you can see the red line here. This is the price of real estate. So even beforehand, the price of real estate was going up, and that was really a supply and demand issue. That's because during the war, the Germans bombed most of our houses in the UK. So as people were going through the baby boomer generation and they were all needing houses for their young families, we needed to build a lot more houses because there was massive demand. And because of that, supply and demand, house prices went up, and they went up on that same trajectory for quite some time in line with gold. So gold, real estate, this is the real value of real stuff. Unfortunately, you've seen lately, this is 2008 right here in the middle where gold actually surpassed housing, and you can see that that line, that the trajectory that housing was on, has sort of leveled off since then, because people maybe can't afford the higher house prices like they could in the past. So people are really getting squeezed. Now gold has continued to go up. So because of this, does this mean that gold is overvalued? Houses are overvalued? Rent is too much? Or is there a problem with the currency? Right here we have the M2 money supply for the US. So basically this is all the money which is in like people's bank accounts and that out there in the USA. And 2020 happened, so it goes up on average during this period here through the 2000s, everything from 2008, it was going up at roughly 6% per year. So that is the currency supply getting inflated by 6% per year. Now, I know that the CPI figures and all that only say that it's like less than 2% through most of this period. And even here, where it jumps up over 30%, right, it jumps up about 33%. This is a bit higher. This is about 40%, but it did come down. So the currency supply got inflated by about 40%, but the figures only say about 10%. Yet we know through buying stuff in the shops every week to feed our families that it's gone up a lot more than what the CPI, the official inflation figures, are. But I think if you actually look at the inflation of the currency supply, that's more in line with what you see with the price changes in the shops. So why am I showing you this? Basically because if they're continuing to inflate the currency supply, inflation will continue. The gold price will continue to go up. House prices will continue to go up. The rents will continue to go up. So what on earth are you supposed to do about it? So what I've done just under here is actually created a chart that should show you that. This blue line here is the cost of houses rising since, let me see, 2014. Okay, so since 2014, housing has outpriced the red one, which is the stock market, and the rent, which is really struggling to keep up all the way down there. So, you know, stocks would have been better than cash in the bank, not quite as good as houses, but certainly better than cash. And over here, what we've done is we've added into the chart this yellow line, which is Bitcoin. So that would have done tremendously well. Obviously, I'm sure you know that hindsight is a beautiful thing. So what you really want here, if not Bitcoin, is just something else which maybe goes up better than houses. And over here, the original chart I've shown you is of course gold. So gold has been outpacing houses. But if we have a look at the sort of how much money it costs to buy a house using ounces of gold coins, just like the good old days when money was actual gold and silver. Now, historically speaking, the average house price in the UK is always normally somewhere between 250 ounces of gold to buy the average house. Now, there is times in history, particularly in the run up to 2008. So this was 2003, 2004, 2005, 2006. I think this one, 2007. So you saw clearly on this chart that house prices had got up into a bubble, that there was a problem, that prices were coming down relative to gold, and a crash was kind of inevitable at that point. So there was a sort of red flag here. Prices went all the way up to almost 700 ounces of gold for a house. So at that point, that is really where you're maybe looking to scale back on your real estate investing and buying a house and look more into buying gold. And that's exactly what happened. Gold absolutely outpaced houses from that point. But where we are right now, so we're all the way down here. This is about 150 ounces of gold to buy the average house in the UK right now, which means that houses right now, despite their price tag in pounds, they're actually really, really cheap. So if you can afford to buy a buy-to-let or buy some sort of real estate here in the UK, I would suggest, based on the price in gold, that it's actually a very, very good deal right now to buy some of these houses. Housing has been underperforming gold for some time, and it's probably not helped by the fact that rental yields are so historically low. So just 10% for gross rental yield, which means that doesn't take into account the mortgage, doesn't take into account that the Tories stopped like private landlords from deducting the cost of the mortgage, the interest on the mortgage, as a like taxable expense. Now landlords are taxed on the entire amount of the rental income without actually being able to take out that as an expense. So they're taxed on everything. It's just absolutely ridiculous. They're getting squeezed on the taxes. They're getting squeezed on the rental yields. So if you are buying a house, what on earth are you going to do with it if not rent it out for very, very poor returns? So guys, I know what I think about this, and I know what I think the problem is here in the UK, but I'm really, really interested to hear maybe what you guys think about this problem. What do you think that the UK economy needs to do, the US economy, the sort of world at large? What is the answer to this problem? In the UK, we've just got a new government now, and their solution to this problem, to create more growth in the UK, is to raise taxes and then give people more handouts. So they can raise taxes and then give lower income earners an extra helping hand. Is it really going to help? I don't know. You let me know your thoughts down below, and we'll see what you come up with. And also let me know what your plans are to combat this. What are your plans to make money? Business, investing in what? Let me know down below, and I'll see you again in tomorrow's video.